Welcome to another episode of Making Money on Bitcoin. Today I'll talk you through some ideas that can give you an edge while trading on Deribit. So Deribit is just another derivatives exchange just like Bitmex, but they are much smaller with less liquidity. The unique feature is that they do have options, and they have the most liquid Bitcoin options market in the crypto space. What can give you an edge on Deribit? First of all, there are the fees. They have different fee structure than Bitmex. The fees are, in general, slightly lower for the futures, and they are exactly the same for their perpetual swap, which is fairly new. Please use the referral link in the description below, which will give you 10% fee discount for the first 6 months, and I'll get a small proportion of your fees if you register with my link. Always aim to be the maker for the futures and perpetual swap, but quite often there will be occasions when you will use the taker fee. For options, there are fees for maker and for taker. If you're going to trade the options, the referral link with the fee discount is especially good. So let's say that you are a bull and you want to bet that Bitcoin will go up. So rather than buying futures or perpetual swap on Bitmex and having around 50% of chance of winning and 50% of chance of losing, you can sell options. Now, prices of options are structured in a way that gives an edge to the sellers. How are the options priced? Probably the easiest to understand way of pricing options is the implied volatility. Now this is the historical volatility. So early in August, the realized volatility, so the true volatility, was around 60%, while now it's around 71. It was 73%, and the options are priced. Let's say that the short-term ones, with the buys at around 60-70% implied volatility and the sells around 80%. The longer term ones are a bit more expensive because it's difficult to predict what will be the true volatility in the future, so they are around 80%, and these can go up to 100% and over. So an option with implied volatility of, let's say, 50% is a cheap option, and an option with implied volatility of 250% is an expensive option. And it's good to sell an expensive option, it's good to buy a cheap option. Now, how does the volatility of Bitcoin behave? There is one chart which shows the history of implied volatility of options on Deribit. And this is it. So in late 2018, the volatility was all over the place, and the implied volatility, which is the price of options on Deribit exchange, was up to 150%. Then during the pump and dump times, it was very high. The implied volatility was around 150%, so the options were very expensive. But now the volatility has dropped, and the implied volatility is near all-time lows, so it's a very good time to purchase options. Now, why is volatility high? Why is volatility low? So the wild swings of price make a realized volatility high, and when you sell an option, you bet for you would like the price to stay completely flat, because then the premium for the option goes down over time and you make money. If the volatility is completely crazy, just like it was just like the price action was yesterday with this large wick, then the option sellers might get slightly worse deal. But overall, selling an option is more favorable than buying an option. So let's say you are a bull and you want to bet for Bitcoin price to go up. So rather than buying futures, buying swap, or buying a call option, you can sell a put option. Now a put option is a contract that allows your counterparty to sell an option at a strike price. So maybe let's look here. If you manage to sell this option at this price, as this market maker is selling at $1,165 with a strike price of $7,750, and the price goes up to a put option allows your counterparty to sell one Bitcoin at a price of $7,750. So if the price goes up, the option is worthless. If it goes up to 7,750 or above, the option is completely worthless. However, if the price goes down, the option is more and more expensive. Important things in the option pricing is the strike price and the price of an option itself. So let's say you do manage to sell this option and the price goes up to 7,750. You have made $1,168 from selling that. So if you are a bull and if you are making a bet that Bitcoin will go up to this price, you could consider trying to sell an expensive option rather than buying futures or swap and hoping it will not go down. Now with selling options, the risks are infinite. They are not capped by any limits. So you might get liquidated. The way you get liquidated on Deribit is the staff manually purchases purchases futures for you, which will flatten your exposure. You will not get liquidated unless you have portfolio margin activated on your account. So if you don't do anything with your Deribit account, you cannot get liquidated buying options, but you can get liquidated selling options. Portfolio margin is a useful thing to have. You can just email support and they'll activate it on your account. It's especially good if you have exposure. So if you buy futures, sell options, or sell futures, buy options, it gives you much more margin to work on. But it's difficult to sell this option at this price because there is a big spread. What you could try is, for example, sell this option. This option is also highly priced at 100% implied volatility, or maybe this one or this one. These will earn you much less money, but yeah, in general, consider selling options, selling put options if you are a bull, and selling call options if you are a bear. The most liquid products are the ones near the with the strike price near the current spot price. So these sort of options, you can see high volume here. If you want to sell an exotic option like this one, you could either set an offer and let it sit in the order book. However, if the price goes against you and you don't adjust the price, you can get a very bad deal. They do have this complex order form with implied volatility, with the price tracking the index. This is supposed to work out of the box, but it is quite risky. So for example, with the price action, this should follow the index price. With the price action, like we saw yesterday, someone can take advantage of you and you may lose money having this sort of option in the order book. So use this sort of order with care. So yeah, that's one way to get an advantage, is to sell options, and you can track how your options are performing here in the options summary. You get the delta, so it shows you what is your exposure to Bitcoin. You can maintain flat exposure to Bitcoin. You can sell a lot of options and then buy or sell the perpetual swap on Deribit. That way you will have completely flat exposure to Bitcoin. Now the ideal way would be to set a bot which would track the price and adjust the delta all the time, or you can just adjust the delta every day. That could also work. The gamma just shows you how the delta changes with $1 move of the index. The Vega is another one of the Greeks. It shows you how the portfolio value changes with the implied volatility on the exchange, and the theta is the one which shows you how much you are earning a day if you sold options on, or how much are you losing every day if you bought options, because the options have expiry date, and over time they lose value. So if you sell this option, you're essentially gaining some money every day, hoping that it will never that it will go above this price and it will not be below it. Another way of having an edge is looking at their perpetual swap. So their perpetual swap works different than the perpetual swap on Bitmex. On Bitmex, the funding has the basis of 0.01% every 8 hours, while here it doesn't. So let's say that the price is kept well between the clumps of 0.05% above and below the spot. The funding on Bitmex will always be 0.01% every 8 hours for bears, which will give you 11.6% a year. And if the same is true on Deribit, if the price is being kept within 0.05% of the spot on Deribit, the funding will be completely zero, and it is zero at the moment, and over the last 8 hours it was 0.009 negative funding. So it could be a bet that you could try risking. It's rather high risk. Well, it's not high risk, but it's something rather complex, and it's not something I would recommend, at least early. Another way of getting an edge trading on Deribit is to look at their at prices of their options. So you can see that Deribit options, these are the prices for Deribit options. So Deribit is slightly bullish, while Bitmex is slightly bearish in comparison. So you can buy a futures contract on Bitmex. Let's say you want to buy a September swap, which is trading at 6593, and you can sell it here at 6610. So that will give you $18 profit if you wait until the expiry on the 28th of September. So if you wait for 30 odd days, you will have guaranteed gains, but you have to consider the trading fees and the slippage. So it's not a great deal at the moment, but if you keep your eye on these, you might find some good offers, some good differences between the futures of the same expiry. And I don't think there are any more tips that I can give you about Deribit. A thing to keep in mind is that the insurance fund of Deribit isn't as big as Bitmex, but they do have good relationships with their market makers. In the past, when they lost some money, the market makers actually contributed to the losses which the exchange incurred. So there is a good chance that if there is a problem, if there is a big loss, that the market makers, could again contribute to that. So here it is, how to get an edge on Deribit. If you liked what you saw, please press like, comment, subscribe. Feel free to use my referral links. They will give you 10% fee discount on Deribit, 10% fee discount on Bitmex, $10 on Coinbase, and some others. Thank you very much for watching.